we can see here essentially 5 submarkets. Docklands is a kind of a finance centre, but so too, more traditionally, I guess, is City. Freya, you would have a better knowledge, working knowledge of these submarkets. How would you differentiate one against the other?
Yeah, well, that can be broken down obviously in terms of the type of players in the market and obviously value as well. So the West End, just to start with, traditionally, this is very much a finance district. This is also where you're going to see the highest rents and also the lowest yields. So yields traditionally, as we'll go on to talk about, but sort of about 3.5% up to 4%, 4.5%, things like that. The floor plates are generally also smaller just because of the type of offices in that location, and you also have some landmark buildings. So they really are for front office, client-facing businesses in that location. So places like St James, Mayfair, Soho, things like that. So moving across into Midtown. So again, in terms of value, it drops off a little bit. So in terms of rents, you're looking at things more like 40 to 60 pounds a square foot, whereas obviously you can see in the West End, it's 100 and above. So this is probably more traditionally leaning towards legal firms, slightly bigger office plates, and connectivity is pretty good because you're between the two markets, the West End and the City, and also it's going to be connected by Crossrail this year, so that's only going to go up. And then the City, I mean, this is the main sort of business financial district for London. So again, you've got landmark buildings like the Walkie-Talkie and the Scalpel, and obviously the Royal Exchange. So you've got occupiers such as banks and also the insurance district as well, which is probably one of the main players. And then also the values here are again similar to Midtown again, so sort of 40 to 60 pounds a square foot, and the yields are a little bit higher, probably more sort of 4.5% to 5% is probably what you're expecting. So those sort of those key markets. And then I suppose if you're thinking about the Docklands, as David sort of mentioned, this would probably also encapsulate the area that we all know as Canary Wharf, which again is a business financial district. And this was created in a way of making much more affordable office accommodation. So the rents here again are lower, so maybe more like £35 to £45 a square foot. So that's just a brief snapshot for you.
Great, perfect. South Bank is also listed there. It seems to benefit from the transport links. It has a Waterloo station there. Would the office space there be lower still, do you think, or is it? How does it compare?
I mean, I would suggest that it would, because office accommodation sort of radiates away from the city here, because it really is only across the river. I mean, traditionally, it wasn't as sought after, but it is certainly increasing. So the values might actually be comparable maybe to Midtown, depending obviously on the office accommodation, because obviously you have things like the Shard sitting just in there. So it's certainly increasing in popularity.
It's growing. No, thank you for that. That really helps kind of set the scene, I guess, for the London market. I've taken a table here from research produced by Savills, where it talks about rents. And what's interesting over the last 4 quarters, over the last 12 months, we've obviously been through the lockdown. Rents, if we look at the prime space in the West End, in terms of rental value movements, they've held surprisingly well. There was in the December to March quarter, it dipped somewhat, but then rose again. So is that a sign that demand is returning perhaps to the West End?
I would certainly suggest, yes. I mean, but I think what we can also see that it's demonstrated here, it's also from the grade A accommodation. So this is something that we may go on to talk about, but I think that is where the demand is coming from because of I suppose, the opportunity that it presents to landlords and tenants in terms of the flexibility and the quality of space and what occupiers now want.
Yeah. Just actually on that, have you, as a very simple way for those who might be unfamiliar with these expressions, grade A, grade B, and because different markets will have different expressions. How is that defined, or is there an easy way of differentiating between those 3 types?
Yeah, so very simply, so category B is generally what we would say would be second-hand space or tenant space. So normally maybe it's fitted, it's not as good a quality potentially, or maybe hasn't been as well maintained, but more affordable. And then category A is, as you would imagine, more superior. It may not have tenant fit out, it may have higher quality specification. And then, I mean, it is always changing. So a new category that has emerged in recent years is Cat A plus or Cat A plus plus, which is much higher quality accommodation, something that we're seeing actually probably more in the City of London. And then you also have shell and core as well, where a tenant would come in and completely fit the unit themselves. So hopefully that gives an idea.
Yeah. Perfect. So Cat A or plus is real kind of trophy type, headquarter type space. It's very much showcasing the occupants to their market. Interestingly, I just noticed there that in the last quarter, Savills suggests that the rent-free periods being offered seems to be increasing. In West End, does that? Is there anything to read from that? Is that suggesting a more difficult market? Perhaps it seems to contradict the rising rent.
Well, the reason why rent-free periods generally move outward is basically to maintain investment value. Because while headline rents may be stable or indeed increasing, obviously the incentives are then bringing down what we call the net effective rents to tenants, because obviously the liability and cost for tenants and the demand for space may not be there. So it's a way of sort of potentially artificially supporting the market.